Michigan Health and Life Group is an independent agency with access to all three carriers approved to offer fully funded group health coverage in northern Michigan. We are a full-service agency with commercial and personal insurance available. We offer confidential assistance for employees with group, individual, government, or catastrophic coverage needs. We have over 49 years of experience in the regulatory environment, with access to professional legal advice on ERISA, TAMRA, PPACA, and COBRA compliance. The question we're going to examine today is, should employers offer group health insurance for their employees? There are many issues surrounding this question, and we will try to present them so that the employer can make an informed decision that is in the best interest of both their employees and their ability to remain competitive in the marketplace. The Affordable Care Act doesn't actually require employers to offer health insurance. However, groups with 50 or more full-time equivalent employees face tax penalties if they don't offer minimum essential coverage. For purposes of today's discussion, we'll look at under 50 groups since they have the option of not offering coverage at all. Before we do though, let's take a step back and see how group size is calculated, so you know where you stand in the PPACA, or Patient Protection and Affordable Care Act, arena. The total number of full-time and full-time equivalents is really just the sum of two numbers, but there's a little bit more math involved. First, you have the number of full-time employees. Those are employees that are working 30 hours a week or 130 hours in a calendar month. Then you have to look at the number of full-time equivalents. To calculate full-time equivalents, you take your part-time people, add up their hours, divided by 120. You do this calculation for every month in the 12-month period, add them together, and divide by 12 to determine your average monthly FTE employee count. Under the strict interpretation of the law, you should look at the preceding calendar year as your 12-month period. This means that if you are quoting a group for January 2016 and doing it in August 2015, the preceding calendar year would be January through December 2014. Some carriers may choose to exercise liberality in interpreting this rule. Just remember that the penalties will fall on the employer for non-compliance, and failing to accurately count employees produces exposure to liability as well as civil penalties. If you have 50 or more employees under the PPACA definition, you will need to have another discussion that factors in the employer tax penalty for not offering coverage. Otherwise, most of the factors that apply to small groups will also apply to large when trying to decide whether or not to offer group health insurance. For 2015, the penalty, which the Supreme Court has determined is actually a tax, will only be applied to groups with 100 or more employees. The first 80 employees are forgiven, so the example above, if a group has 100 employees, then 100 minus 80 equals 20 times $2,000 equals a $40,000 penalty or tax for an employer who does not offer minimum affordable coverage to at least 70% of their full-time employees in 2015. The percentage moves to 95% in 2016. Other than the employer penalty for large group, as we mentioned, most of the factors that apply to small groups will need to have another discussion that apply to large when trying to decide whether or not to offer group health insurance. Believe it or not, these factors should be considered because some employees may actually be better off if the employer does not offer minimum essential coverage. Believe it or not, these factors employees who don't opt for any coverage or have only catastrophic coverage that doesn't meet the definition of minimum essential coverage, employees who don't opt for any coverage or have only catastrophic coverage that doesn't meet the definition of minimum essential coverage, or $325 will find that the penalty on their person, whichever is income tax, in 2016 2% of adjusted gross income, or $325 per person, whichever is greater. In 2016, it goes up to 2.5% of income, or $695 per person, whichever is greater. If you have 50 or more employees under the PPACA definition, you will need to have another discussion that factors in the employer tax penalty for not offering coverage. Otherwise, most of the factors that apply to small groups will also apply to large when trying to decide whether or not to offer group health insurance. Believe it or not, these factors should be considered because some employees may actually be better off if the employer does not offer minimum essential coverage. Employees who don't opt for any coverage or who have only catastrophic coverage that doesn't meet the definition of minimum essential coverage will find that the penalty on their 2015 income tax has grown to 2% of adjusted gross income or $325 per person, whichever is greater. In 2016, it goes up to 2.5% of income or $695 per person, whichever is greater. Here's an example for a couple who came in recently. Even with the subsidy on the exchange, they were money ahead with catastrophic only coverage, even when the cost of paying the penalty was included. These calculations will change every month as rates, penalties, and subsidies vary with income and the quarter in which rates are being quoted. In this example, the cheapest exchange plan was $107.50 per member per month, while the non-qualifying catastrophic plan was $80.38 per member per month, even when the penalty was included in the cost. There is a segment of the population who may qualify for a subsidy on the exchange, but will still have to decide between groceries and insurance. This gap is expected to increase over time, and we will have a whole separate video dedicated to trends in healthcare. The benefits for the employer offering coverage are fairly direct. It can be used as a tool to attract and retain talent, making the employer more competitive in the marketplace. The related expenses are also deductible. There's also a small business tax credit available as an incentive, but it is limited to 2 years, requires the employer to pay at least 50% of the costs of the plans purchased, and the plans purchased must come off the shop marketplace. Only a handful of employers in Michigan have pursued the tax credit. We have access to a tax credit calculator online in case you want to consider this. Employees and their families who have access to health care tend to be healthier, which increases presenteeism and decreases absenteeism. People are able to stay on the job. There are also some benefits for the employee when their employer offers coverage. A biggie is that the employer-sponsored coverage is the only way to have premiums paid with pre-tax dollars, as in a Section 125 plan. A warning: some agents may say that employers can reimburse employees pre-tax for their individual non-employer-sponsored insurance costs, but the IRS has determined that this constitutes a definition of a health plan and is not allowed. Employees also get to avoid the individual penalty when they have coverage at work, and of course the employer is sharing in the cost. Benefits for the employer not offering coverage begin with cost. For some businesses and industries, there's simply not enough margin to carry the additional expense. In addition, employers who send their employees out into the marketplace to purchase their own individual coverage try to make those employees whole by increasing their pay. This results in higher payroll taxes, and since workman's comp premiums are wage-based, insurance costs also go up. When the employer is divorced from the inflationary trend in healthcare, they may also lose sight of the hardship paying for insurance places on the employee. At the same time, though, the budget may be freed up to pay for other benefits like dental, vision, or seeding money into the employee's HSA bank account. Many employers who do offer coverage will not allow spouses to participate unless they have no coverage available at their own work. By not offering coverage, your employee may become eligible to participate on a spouse's plan. Your employees may also be eligible for the new Medicaid program called Healthy Michigan, if their household income is below 138% of the poverty level. This could be substantially better coverage than the employer would be able to afford. Also, when your employees can't get coverage at work, they can then participate in the individual exchange and may qualify for a premium subsidy. The employee who has no employer-sponsored coverage available faces several issues similar to the employer. First is cost. They can only buy insurance with after-tax dollars, and they are often on their own when it comes to paying the cost of insurance. They are also exposed to the penalty if they don't purchase health insurance. They can turn to their spouse's employer for coverage or Medicaid, or may qualify for a subsidy on the exchange. Employees can also purchase the plan that best fits their needs. They don't have to put up with the one-size-fits-all approach so often applied in group coverage. There are some options for employers who want to offer their employees choice. These defined contribution plans allow the employer to give everyone an equal share to purchase their insurance, but the employee has the ability to pick from a short menu of product choices. Some of these exchanges are captive, meaning they only offer benefits from one carrier. Others offer a variety of carriers. They are fairly new to the market, and the underwriting tends to be more complex since multiple plans are involved and the door is open to some adverse selection. That being said, it remains to be seen how these products will trend and if the unknowns at the underwriting level will still result in a sustainable trend in costs. Michigan Health and Life Group is an independent agency with access to all three carriers, approved to offer fully funded group health coverage in northern Michigan. We are a full-service agency with commercial and personal insurance available. We offer confidential assistance for employees with group, individual, government, or catastrophic coverage needs. We have over 49 years of experience in the regulatory environment, with access to professional legal advice on ERISA, TAMRA, PPACA, and COBRA compliance. Like us on Facebook, and you will be able to receive links to our many articles, videos, and resources. Thank you for your time today.